Hello, everyone. Today on the final bar, my guest is Dave Landry, StockCharts contributor, expert in Landry Light, which is a great way of just visualizing trends and where the price is relative to its longer-term trend. Also, we'll talk a little bit about cryptocurrencies overall, which have been on a tear. We'll talk about some of the lesser-known ones you may want to know about. Overall, distribution mode for equities, but some signs of life in places like energy, financials. Ladies and gentlemen, this is the final bar. Hello, everyone. Welcome to today's edition of The Final Bar. I'm your host, Dave Keller. I'm the Chief Market Strategist here at StockCharts.com in a sunny Redmond, Washington. Thanks for joining us every weekday after the close as we look at these markets together using the power of data visualization through StockCharts. We'll look at trends, momentum, price behavior, investor behavior, sentiment, breadth, everything we can to try to make sense of things together. We're really excited to talk to Dave Landry today. I've gotten to know Dave and his work over the years, and he's a fantastic gentleman, but also a really knowledgeable trader and investor. And I think you'll like some of the charts he has. An indicator called Landry Light, which we have on our ACP platform, does a great job just visualizing trends, and it's something that I found pretty helpful. We'll look at some examples together here in a bit. Also, we have some great guests coming up in future episodes. Tomorrow on the 15th, we have Roman Bogomazov, who's the founder of Wyckoff Analytics. Wyckoff is a methodology. It's really a framework with which you can approach a stock, a chart. Next week on the 21st, Tuesday, we have Frank Capillari from Instinet. On Wednesday, Sam Stovall, a strategist at CFRA Research in New York. Coming up this Saturday, we have the exclamation point on our week-long exploration of options trading. We have an Options 101 panel. I hope you've seen some of the segments or some of the special events we've done during this week. Daniel Shea, Tony Zhang, others have done, Joe Duarte have done a really good job of sharing some of their insights on how to look at the options market. If you miss those, go to StockCharts TV on demand or on our YouTube channel. Coming up this Saturday, a free panel, a live options trading plan. I'm going to have 3 experts asking them questions about how to get started trading options. What are some of the lessons they've learned? How have they coached novice options investors to find success? And if you're just getting started, if you're not quite into options yet, it could be a really good opportunity to learn from some others who have come before you. Go to stockcharts.com/options101 for more info on that. Let's get to our market recap. As I mentioned, the S&P in distribution mode, and overall the day was sort of in 2 halves. The morning session was choppy sideways. We actually made a new swing high there early in the day, but then really the second half of the day was more of a period of weakness. Now the whole day has been the S&P in the middle, NASDAQ weaker, the Dow stronger, literally the inverse of what we saw yesterday. So if you were all excited about growth over value, that completely turned over yet again today. And overall, when I'm seeing growth work and value not work, and then the next day value works and growth doesn't make me feel super confident about a long-term healthy uptrend. That makes me feel more like a market in rotation, right? Where you're just seeing choppiness, you're seeing overall trend rotation and not a lot of explicit upward movement. However, it's worth noting the S&P keeps making new all-time highs. So you have to assume that that's the path of least resistance until proven otherwise. Today, energy and financials were working, which is why the small cap index was back up. This is after being weaker recently. The NASDAQ 100 down 1.3%. The VIX back up above 17 now, but still, again, relatively low compared to the last year. As we talked yesterday with Mark Ungewitter, though, if you look at the long-term trend on the VIX, we're still pretty high relative to some of those previous years, just in the last 5 or 6 years even. Bonds, a little weaker today. Again, the 10-year yield back up around 164, so just a little bit below that. Gold was down, but most of the energy complex was up. And as I mentioned, energy stocks were the #1 place. Sort of a mixed bag when you go to cryptocurrencies. Bitcoin really coming off in the latter portion of the afternoon, closing just below 62,000, or really just trading below 62,000 right about now. Let's look at a chart of the S&P. We'll focus in on what we're seeing there, and then we'll get back to some of the other themes that have evolved today. So, I did a video for my own YouTube channel, which is called Market Misbehavior. Just in the last, yesterday, I posted up there, and it was about the S&P and overbought conditions. So, over the last week, the S&P has become overbought. That's the third time that's happened in the last 12 months. It's happened many times, obviously, over history, but just in the last year, you've seen it happen 3 different times. Those last 2 times have been tactical pullbacks within the long-term uptrend. The 2 previous times were in June of 2020. The second time was in August of 2020. It's worth noting the first time it was overbought for about a week, similar to what we've seen currently. In August, it actually became overbought, stayed overbought for about a week and a half, 2 weeks. And then we had the choppy sideways period in September and October of last year before the uptrend sort of resumed. So today at the close, the RSI came back out of that overbought region. So at this moment, it looks a little bit like last June in terms of the general pattern where you became overbought for a couple of days, you rotated back lower. So the stock market, the equity market being overbought on its own is not a bad thing. I think when I was just learning technical analysis, I was taught overbought is bad, oversold is good, because I was working with a lot of hedge funds that were all about mean reversion, and that was the general way that they would think of the world. However, having spent a lot more time with long-term investors as my career progressed, I've learned that, overbought, the quote we'd always say is overbought means up a lot. Just because something is overbought is not necessarily a bad thing. That tells you the trend has actually been positive. So it's all about the short-term tactical read versus the long-term trend. If all else being equal, how would I interpret this current move on the S&P? It would tell me we've had a nice run of strength into the last week. The fact that we were overbought and came out of that tells me to expect some short-term weakness, but overall, the fact that we're becoming overbought is more characteristic of a bull market phase than a bear market phase. So, back of the envelope interpretation is sort of short-term bearish, long-term bullish. And that's, I think, sort of generally how I would see things with the current market. It's interesting as we've seen that, and I'm sorry now for jumping around a bit, but things are popping in my head as we're going here. We've had some financial stocks reporting earnings this morning. Just getting my notes here. We had Goldman, JP Morgan, Wells Fargo. Tomorrow we have Bank of America, Citigroup, BlackRock. So these are some pretty big cap stocks within banks, investment banks, and it's interesting to see how they come out. A couple of them higher today. So Goldman bouncing off of its 50-day moving average. I was on the NASDAQ Trade Talks show yesterday, and we talked about this particular chart. And earnings can be a catalyst. I think charts are really helpful to use during earnings season just to see what the expectations are going into an earnings release, what the expectations are coming out of there, how the market's interpreting, digesting what came off with earnings. So Goldman finished about in the mid range for the day. So it was up a lot higher earlier in the day, about 5% or so, maybe just below that, but overall close about 2.33% higher. I think bouncing off the 50-day is pretty key. And again, with this chart, as long as it remains above the 50-day, if it breaks out, remains above 315, which would be the swing lows from March, overall, it's a pretty decent chart with arguably a buyable pullback within an uptrend. We start breaking those levels, though, and all of a sudden this starts to look a lot more distributed. This starts to look more like a head and shoulders top, even though it's a fairly short-term time frame, but still looks a little distributive. The bearish divergences, we've seen a momentum become a lot more validated if you start breaking swing lows. So that's what I'll be looking for there. Wells Fargo is another stock that had a nice earnings win, closed up about 5.5%, making a new 12-month high, actually getting above the April highs getting above the highs from mid-March. This is mid-sell-off going into the May low for the stock. So nice rotation higher. So overall, a chart like that, I would never feel that bad about being somewhat optimistic on. JP Morgan is maybe the outlier, which traded down after its earnings release today. And again, stock is still not in trouble. I'm looking at these ascending 50-day moving averages with a lot of these stocks to see if they're able to hold. It's interesting as you're seeing energy stocks rally today. If you look at the chart of ConocoPhillips or some of those other energy names, kind of a similar thing. So these value stocks are pulling back to their ascending 50-day moving averages. And again, in an uptrend, that's fairly healthy that you have a stock pull back to its 10-week moving average. That would be sort of the time to digest previous gains. That would be an opportunity for institutions to buy in and add on short-term weakness. So potentially setting up for a nice rotation higher for those value stocks. But again, it's all about whether the 50-day holds. If they don't, it's whether it breaks those swing lows. And even on ConocoPhillips, you have support around 50, just above there. And if it's able to hold, that's encouraging. If not, could be very concerning if you see those stocks break those short-term support levels. Let's look elsewhere at the markets today and what's happened. As I mentioned, in terms of short-term leadership, is really the cyclicals at the top. Energy leading by far. After that, materials, financials, utilities. We'll look at FCX, actually. This is one of the biggest gainers today. It was up almost 9%, maybe a little more than that, closed up just below 8%. But, again, a nice bounce off of the 50-day on a material stock, now making a short-term higher high, higher low. The question for this chart is, can it get above 39, which would be the high from late February? And that would be the key sort of line to confirm further upside there. On the downside, it's the FANG trade. It's the consumer discretionary, technology, communication services. If you look at pretty much anything in the ARK Innovation Fund, it looks kind of like this. Had a good day yesterday, giving back a lot of that today. So sort of a up day and then a down day. Quick question, and then we have to get to our break. What is that candle pattern? We have a big up day followed by a short a down day that finishes at least halfway down through the first bar. I'll zoom in here. You can see it. This sort of pattern. We have a big up bar, a big up candle, a down candle, and you close at least halfway down through it. I'll give you the answer right after the break. We'll take a quick break. Back with Dave Landry from davelandry.com. We'll see you in a minute. Hello, everyone. Welcome back to the Final Bar. This is Dave Keller here at StockCharts.com. It's great to have you join us every weekday after the close as we look at these markets together using the power of data visualization, using charts to make sense of things together. As a reminder, a big part of this show is the Final Bar mailbag, which is where you can send in questions. We'll address as many as we can on the air. You can get your questions to us three ways. Number one, via email, thefinalbar@stockcharts.com. Number two, on Twitter @FinalBarSCTV. Number three, on our YouTube channel, just put a comment below the video that you're watching. Love to answer one of your questions in our next mailbag segment, which will be on Friday's show. Also, as a reminder, the new Stock Charts TV on demand is really beautifully done. I'm proud of the team, the hosts, the guests that we bring on, and all of the great content. I hope you'll find it helps you navigate these markets effectively. Go to stockchartstv.com, set up a free account with your email. We're also on all the app stores. I want to welcome on my guest to the show, Dave Landry. Dave's the founder of DaveLandry.com. Dave, I think of you as a trader and educator, and I think we'll probably get a little bit of both in today's discussion. Thanks for coming back on the show.
Oh, Dave, great to be back. Thank you so much for having me.
So I know you do a fantastic job with your own show on Stock Charts TV. It's well viewed and well respected for very good reason. One of the things you talk about in your show is Landry Light, which you introduced to me, looking at sort of the thinking about the trend related to the moving averages. Start us on this first example, ASO. What is it telling you about the chart here?
Yeah, Landry Light simply is the lows are greater than the moving average. And 20-something years ago, I guess I'm dating myself, I wrote an article for Stocks Commodities, I guess the mid-90s. And somebody called it Daylight. And then it became Dave Light. And then my wife's like, you need to put your name on something. And so I was like, all right, we'll call it Landry Light. But it's just simply the lows are greater than the moving average. And then with the ACP plugin, they programmed it to look like a histogram, and it just counts the number of bars, not magnitude, but just number of bars that are above the moving average. And you can just simply look down at the indicator below to see whether a market is trending or not. Usually 10 or so days, and ideally 20 or more, that the market's in a pretty solid trend. Now, this is an IPO, came public, and it had a first deep retracement. I didn't even realize it was a Landry Light pullback at the time. When I traded it, I just like to trade those first deep pullbacks in IPOs, one of my favorite patterns. But you could see that it did tag the 30 EMA, and you see the Landry Light on the bottom goes from an upward slope, sort of, and then it goes back down to zero and resets. And it had one more little kiss of the moving average, and it took off again. And we did get long this stock. We are still long a partial position of this stock. We actually sell on the swing trade, and we hang on just in case it turns into a longer-term trend. And so far, knock on wood, it's been a really good trend. But let's say you miss that first entry back around point A. Then you notice that you had the Landry Light lows above the moving average, where I have that line where you're pointing out on the screen, pulls back to the moving average once again. And then if you look at the bottom, you can see it drops down to 0 and the count restarts. Now, if you don't have, I don't use indicators initially. I look at a blank chart first before I put any indicators on. But the good thing about something like Landry Light is it does give you a visualization of the trend. Easy for me to say. One thing that I'm known for doing is just drawing a big blue arrow on the chart. So you should be able to just draw a big arrow. You once said, one of your peers said something like, I like trends where I don't need my eyeglasses to see. And I think that's a great analogy to that. But anyway, you can see it pulls back to the moving average, and it had a hard time getting going again. But if you use a fairly liberal stop, as we do, then you should still be long this stock and should be able to capture that move higher. One thing that's sort of interesting, as I'm just kind of looking at it and learning as I'm looking at it, is notice that we only had one bar of downside Landry Light after point B, and you kind of have to squint your eyes to see it down there, right there. There you go. And so that's a pretty solid trend. So if you could just have your stop a little bit below that 30-day EMA, give it a little bit of wiggle room below, a lot of times you're able to ride out these longer term trends.
I love this, and the general approach, which I love, it's looking for established trends, but short-term weakness, right? So long-term strength, short-term weakness, which has been shown to be a pretty powerful combination. Now, you, Dave, have done such a great job looking at cryptocurrencies, and not just things like Bitcoin and Ethereum that a lot of people are looking at, but down the list of some of the lesser-known cryptos. This is one in particular you brought to the table. Talk us through this chart.
Yeah, I got nailed with COVID really bad. And when I recovered from it, I said, I'm going to start doing things that I've been meaning to do for a long time. And one of them was figure out the altcoins. And I spent all Sunday morning working on them and charting them and figuring them out. And I think my initial approach to them was to try to figure out what they did, sort of like when I looked at stocks 30 something years ago. And then I realized, hey, you know what? Let's just buy the ones that go up and sell the ones that go down. And my life got a lot easier. But you can notice at point A, the market began to take off. And that doesn't look very impressive, but if you were to go back in time, you can see that was a pretty massive move higher. And notice that it kind of was chopping around, not really trending. And notice the Landry Light's going from green to red to green to red. So there's really not a whole lot to do. But then we had nice Landry Light coming into the year, little pullback, little kiss of the moving average. The Landry Light below goes to 0, takes off again. And then you see it once again at point B, tags the moving average. Landry Light below goes from a nice positive number down to 0. You mentioned overbought earlier, and markets can often become more overbought. So you got to be careful just trying to jump in an overbought market, obviously. But you notice with the Landry Light, sometimes when you get these very high readings, like 40 or so, not that you want to exit the market, but if you haven't taken partial profits, it might be a good time to do so because you know the market is overbought. And notice how it comes back down, corrects the moving average, and then it begins to take off again from point B.
It's such a great example. We only have about 30 seconds, but I'd love to bring up a chart of the S&P using this chart, right? Using the Landry Light,
sure,
which I'm showing here. Can you just give us a quick take? What is this telling you about the current setup?
Well, it was a little wide and loose last fall. Obviously, we had green and then red, and then now it's sort of climbing that wall of worry. We're back to green again. And it's like, believe in what you see and not in what you believe. A lot of things you brought up earlier, I've been seeing internally happen with this market. Certain sectors just downtrending like biotech and a lot of sector rotation. But hey, you know, the S&P keeps going higher today, notwithstanding. So right now, Landry Light says it's headed higher. And I'm just going to have to believe in what I see and not in what I believe.
I love that quote, and we'll leave it there. Dave, it's awesome to have you on as always. Anytime you come on, I wish we had a couple hours to spend together, but we'll take this for now. Stay safe. Glad you and your wife are healthy, and we'll talk to you again soon. All right.
Thank you so much, Dave. Glad to be here.
That's Dave Landry from DaveLandry.com. And again, Landry Light is such a great visualization that just makes it clear the fact that you have an established trend and then you've had a pullback. And that's an approach that we talk about often. I think it's a great visualization to throw it on there. This, by the way, is part of the free plugin on StockCharts ACP. Look for Dave Landry's free plugin. There's this indicator and some others. You're welcome to install it on your own login and experiment a bit. Also, he mentioned the quote about, I love trends that you don't need your glasses to see. That was one of my favorite quotes from John Mendelsohn, who's a famous technical analyst, probably better known in the institutional community, but he was at ISI and a number of places and used to come visit us in Boston pretty regularly. I wish I would have written more of his quotes down, but there's some gems like that one in there. I mentioned earlier the chart of Tesla and asked if you knew what that candle pattern is. Have you figured it out yet? It's actually, if you're studying for the CMT, you're trying to learn your candle patterns, it's actually called a dark cloud cover. And that's where you have a big uptrend, a big up candle, an open candle, meaning you close above the open, and then a down candle where you close at least halfway down through that. It's called a dark cloud cover, and it's as ominous as it sort of sounds. It's sort of a short-term distribution pattern telling you the next couple candles are more likely to be lower than higher. If you would get all the way down below the first day's open, that would be called a bearish engulfing pattern. So there you go. It's called a dark cloud cover. Let's continue on. Our next segment is called Banking on Breadth. This is where we focus on breadth indicators. And, we talk about breadth pretty regularly on the show, but I love to focus on just some of the maybe lesser used techniques just to see where they're at. And overall, the challenge I've had at times with this market, and it's certainly been a challenging 12 months, not challenging in the fact that the market's gone higher. In general, that's way more comfortable than when the market's going lower, but I've not felt it to be a very clear-cut move from point A to point B, as much as it seems like one now. There have been a number of times where I've gotten pretty concerned about the extended nature, the overextended nature of it. And especially at the beginning of this year, I've seen situations where I felt divergences and I've looked and noticed breakdowns that concern me. And I would argue still, I don't think I've seen enough to feel that we have dramatic upside from here. I've seen enough to expect limited upside, and I've seen enough potential that there could be downside from here. But again, as Dave Landry was saying, right, it's all about what the price is actually doing. The S&P keeps making new highs, so I have to assume that trend is in place until proven otherwise. Breadth helps us qualify what we're seeing on the chart itself. So here we're looking at our first breadth indicator, which are the cumulative advanced decline lines for 4 different buckets. There's the S&P, mid caps, small caps, and at the very top, it's actually the NYSE. So it's a broad measure, and that's probably the most commonly used advanced decline line. So what's interesting is if you look at the S&P advanced decline line, as the S&P itself has gone to new highs March into April, you can see that the S&P advanced decline line has also confirmed that. The mid cap advanced decline line has also confirmed that. The small cap advanced decline line has certainly not. So while the other cap tiers have made new highs, the small cap advanced decline line has not. And that makes sense because small caps are a little more financials and than in the large cap index, a lot less things like technology and stuff, sort of the growthy trades, a little more value-y. And so when that index, when those sectors are struggling, which financials and energy and others have in the last month, the small cap breadth is going to look less attractive. Small cap index is going to do not as well, and so that's why this has not confirmed it. The NYSE also has not really made a new high. It's just touching it, but not really has broken out like these other two have. So again, it's telling you this is more large and mids that are working. Smalls are not confirming that. This is looking at advancers decliners, daily advancers decliners. So it's basically the percent of stocks that are up on each given day versus the total universe. So it's sort of the day-to-day version of that first chart that we looked at. This is more short-term, and this is more to try to identify days of heavy accumulation and distribution. What I'm struck by here is if you look at this last leg higher, the biggest numbers that I've seen have been around 70, a little under 80% advancers. There haven't been those huge rally days like you had back here coming out of the March 2020 low. You had some days where you had 90% of stocks up on the day. You really haven't had anything like that. And in general, it feels like the peaks are getting lower and lower. So you really aren't having this dramatic everything is up day. And that makes sense to me because you're having, it's like certain things are up, but then other things aren't, right? And then that flips and, you have value over growth and you have growth over value and, they're changing places. It's not like everything is working or everything is not. And so again, for me, that speaks more to a rotational environment. Here we're looking at the percent of S&P stocks above their 200-day and above their 50-day, just in the S&P 500. These are overwhelmingly positive. So you have 95, 96% of the S&P above their 200-day. You have 91% of the S&P above their 50-day. Those are pretty broad positive measures. If you look at these same measures for a broader universe. So here's the percent of New York Stock Exchange stocks above their 200-day. Still pretty high, right? It's above 80%, but it's 84% versus 96%. So you can see that this last move higher has been the S&P. It's been large caps that have driven things higher. Sort of the broader, which is more weighted to mid caps and small caps, is not really confirming that last leg higher. So it feels more about just a rotation and less about a broad rally. We are not having a problem seeing new highs. I posted a chart similar to this on social media earlier and got some pushbacks. Some people saying they're actually seeing a decline over this chart. I get it. But for me, I like the fact that you're seeing occasionally days of 15, 20% of the S&P making new highs. I don't see that as a bad thing. I see that as more of a positive thing. So again, when you look at the S&P, there's plenty of strength out there. The bullish percent index is very well established. This is again using the S&P 500, but over 80% of S&P names are in a bullish trend according to point and figure charts. On balance, volume has not quite confirmed this new high. It's similar to some of the advanced decline lines we saw. This is looking at basically an advanced decline line, but for volume, right? Is volume on up days and down days. You're not seeing this make new highs. And that's one of the ways that you would use on balance volume. This is a Joe Granville creation from decades ago, but the idea is stocks go higher and the on balance volume not confirming it, tell you there's not enough volume on these up days to sustain the up move. I think also if you look at the daily volume read, you can see this downtrend in volume. So a move higher on lower volume and not confirming by on balance volume feels a little sketchy to me. The McClellan oscillator remains above zero. As long as that remains above zero, overall, the trend is in good shape. That's about all the time we have for breadth indicators. So what I'm seeing again is if you look at breadth particular to the S&P, it's not bad. If you look at breadth on a broader universe, it's okay. It's not bad, but it's not great. It's not as good. And so again, for me, I'm seeing weakness when you go under the hood, when you go to those next tier down, right? It's sort of certain stocks are working, but it's not everything. You're seeing a lot of rotation still in place. We need to wrap the show. Go to the 3 and 3 charts in 3 minutes. Here we go. Chart number 1 is looking at growth versus value, but we're using 2 particular ETFs, the RPG and the RPV. These are called the pure growth and pure value ETFs. So the growth and value indexes actually double count certain stocks. So certain stocks can be considered both growth and value. And it's a little confusing because an established growth company is kind of a value company according to the methodology. These 2 indexes and ETFs actually separate the two. So a stock is either a growth stock or a value stock, and it only shows the stocks that are in those unique buckets. So it's more of a pure read on the growthy names versus the value-y names. And you can see that this turned on a dime at the beginning of March, about a month and a half ago, and has rotated higher. So you had this period where value has been clearly working because the line is going down. All of a sudden, this turns up, and this is the last month where the growth trade is working. What's interesting to me is if you start the clock in the fourth quarter of last year, you can see a number of times where this ratio bounces up to the 50-day moving average. And the last couple of times, the ratio has gone back down, basically indicating a rotation back to value. It's interesting that you're seeing stocks like Goldman Sachs, stocks like ConocoPhillips bounce off of their 50-day moving averages, which if those rotate higher and you see a stalling in the growth trade, that ratio is going to do what we just described here. Now, certain stocks are certainly starting to rotate back to the upside, and it's some of the names like Freeport-McMoRan. We highlighted that earlier in our market recap. One of the biggest gainers in the S&P today. Nice rotation higher, and if you think of this as more of a bull flag, which is when you have a big run higher, and then a parallel pullback of lower highs and lower lows, we rotate back to the upside. That actually measures a lot higher. It depends on where you start the measurements. I don't want to throw a crazy objective at you, but overall, this is a bullish pattern. If you had a nice run, a parallel pullback, and then you break out of the top of that pattern, which we've just done today, I'll be looking for follow through the remainder of this week to confirm that. Netflix is an interesting chart. I'm using this to just represent sort of the growthy new economy types of stuff. I've drawn this very subjective purple rectangle to illustrate the range-bound nature of these stocks. So down today, that's fine. It's coming out of the upper end of this range that it's been in for 8 months or so. So not unexpected. Folks, that's our show for today. Thank you so much for joining us every weekday after the close for the final bar. Special thank you to my guest, Dave Landry from davelandry.com. For StockCharts.com in Redmond, Washington, I'm Dave Keller. Be safe. Have a good night.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.